Hello guys, it's Chris from the tradingexchange.co.uk and we're going to take a look at support and resistance. Okay, so we're going to take a look onto the market scope system here, which is FXCM's charting platform. And this time around what we're going to take a look at is the basics of support and resistance. So the easiest way to explain that is really just to kind of show you that resistance means where price struggles to go above, here for example, and support shows places where price has struggled to go below, so for example here. Okay, just this little section of candles that we're looking at around there, that will highlight some basic support and resistance. So I mean, at the moment I'm just looking on a 1 minute chart on the German DAX, and it will show that price has recently been unable to break 97.13 and it's been unable to break above 97.45, let's say. Okay, and we've been bouncing around in here for a few minutes or so. So that's kind of what support and resistance is. Now on a 1 minute chart, that kind of technical analysis is probably useless. But on a much wider chart, so for example, if we changed that to a 4 hour chart, okay, you'll notice that the lines are pretty small in comparison to what they looked like a moment ago, but you can still see that support and resistance acts here. So for example there, that level right there, 10.165, acted as a level of resistance. Price tried to go up, take it out, it was rejected, down we went. We then created another level of support down here when price tried to take out 96.15, created this kind of doji bar or pin bar you might say, before then retracing and cutting back through it again. And again, that might be classed as support. So that's what the terminology tends to mean. By plotting the support and resistance, you can just use line charts. So on FXCM, that's under here. And you can use horizontal or vertical lines or add your own lines, depending on what you like. These are horizontal support and resistance lines. But what you can sometimes find would be trend line support and resistance. So for example, if we just, this is a crude line, it's not perfect, but if we draw that, that sort of shows you there's a rough trend line coming down, and as price came and bounced off of this line, this horizontal support, came back to touch this trend line resistance before coming back down again. And you'll find quite often in markets that they tend to respect, certainly in trending markets, they'll tend to respect these trend lines. And what I'm going to do here is I'm going to press Control, click the line, and it will draw a parallel so we can draw this channel at the top side. So don't think perpendicular is the word I'm after, but just they're parallel to each other or adjacent to each other, and it will just allow you to show what price is doing within that channel. So the horizontal support is where prices come down and bounced off of it. Horizontal resistance is where prices come up and touch the top and come down again. And it works much the same way with these kinds of trend channels as well. The bottom side of it would be the support and the top side would be the resistance. So what is the use of them? Well, the reason that we use these is that you can often tend to plot breakouts. So when price generally respects these levels, you can either trade a bounce from them or a break through them. And often what you'll find in certain markets, certainly if they're trending, is that if they break through an area of support, they generally then tend to look for the next layer of support below that. It's like an onion, you peeled away one layer and it looks for the one below it. And again with resistance, once it's broken or smashed through one roof, it then needs to then be limited by the roof above that. So you can look back on charts to find out where those possible levels would be. And this is a good example actually for support here, because this is the German DAX and we're on a 4 hour chart. So this cluster of candles here goes back to September 2015 to put it in perspective. And prices come down to test this level of support. That was the low that we received, well, that we got around here, about 94, just above 94. And it was around about this low over here in September. But of course in October we were even lower than that. And we got down as far as And again, press Control, draw out the parallel. 9309 or so, somewhere down there. So if we broke through this layer of support and took out the low that we've recently had, we might be then looking for the next layer of support, which would be that one down here. Okay. Could work for resistance as well. So if we were to take out, for example, this high up here at 11427, it might then look for the next layer of resistance, which would be further up, probably around this kind of area. So hopefully that makes sense. So that's what we mean by support and resistance. Now, one thing to really be aware of when you're trading is that when price passes through resistance, that resistance could then potentially become support. So for example, because of course the reverse is true, if it takes out support, that support could then become resistance. So as an example, if we broke this level here and came through this low, this level of support here, what often happens is price sort of relieves, because it's just made such a fall, it then relieves, comes back, touches the previous level of what was support, is now resistance, and then it continues to go further down from there. And that's always a good entry if you can catch it at the point that support becomes resistance. Is always a good entry, and you can see it in so many markets. I'll just show you a few examples of it now, just hopefully ad lib. I'm just going to go to a 30-minute chart. Let's just remove this RSI because I don't want it. Okay, let's just have a look and visually see if we can find one. Here's one. I've just spotted one there. Okay, so price was bouncing around, came down here, originally touched that, created a level of support, bounced, came up, came back down, acted again as support, came up, came through it, and then that became resistance. Price jumped down from there. Okay, what else have we got? Here's another one. Let's move that line there. Here we have price, created a layer of support there, bounced up, came off this trend resistance actually at the top, but we'll ignore that. Crashed through support, came back up, tested it, came back down, and it never tested it again. So if we'd have got in around about here, that would have been a perfect entry, because even if we'd have still been in that trade now, we're looking at 290 points on the DAX, which is quite good if you're trading at £1 or £2 a point or something. See if there's any others. Excuse me. Okay, I'm just kind of trying to visually just see where you've got these kind of opportunities. So this is just on one chart, on a 30-minute chart, but you can find them on all sorts of markets, on smaller time frames as well. And you might even say that this is a particular area right here where we are right now, that price had layers of support around about here, with a number of different times that it attempted to touch it, break it. And we've taken it out now and we're coming up to test it again. It could actually then turn to be a point of resistance. So hopefully that explains a little bit about that for you. The more often price tests a level of resistance or support without breaking it, the stronger the area of resistance or support it is. And when support or resistance level breaks, the strength of the follow-through move depends basically on how strongly the broken support or resistance had been holding previously. With a little practice, you'll be able to spot all of those setups quite easily. And the next lesson, we'll take another look at a decent technical analysis tool.